Buying a business can be a smart way to enter entrepreneurship, and purchasing an existing LLC is an increasingly popular option. But how exactly do you go about buying an LLC? Let's explore the key steps and considerations involved in this process. An LLC, or limited liability company, is a business structure that offers personal asset protection while allowing profits and losses to pass through to individual members' tax returns. Buying an existing LLC can provide immediate operational capabilities, an established reputation, and pre-existing assets and contracts. The first step in buying an LLC is finding one for sale. This can be challenging, as businesses aren't typically advertised on public platforms. Effective strategies include networking within trade groups or local chambers of commerce, scanning business newspapers and trade publications, or connecting with older business owners who might be considering retirement. Once you've identified a potential LLC to purchase, it's crucial to conduct thorough due diligence. This involves examining the company's financial records, including ledgers, tax returns, and accounting books. You'll also need to review important documents such as the LLC operating agreement, articles of organization, business licenses, and any existing contracts or agreements. During this process, it's advisable to enlist professional help. An attorney can assist in reviewing complex legal documents, while a certified public accountant can help determine the fair market value of the LLC and assess its financial health. Next comes the negotiation phase. Start by drafting a term sheet, a non-binding document that outlines the proposed terms of the purchase. This typically includes the purchase price, assets to be acquired, and a timeline for the transaction. Engage in transparent discussions with the seller to clarify any legal, financial, or operational aspects of the business. When finalizing the purchase, you'll need to decide whether to buy the entire LLC or just its assets. Buying the entire LLC means taking on its existing liabilities and contracts, while purchasing only the assets allows you to choose specific parts of the business to acquire. The purchase agreement is a critical document in this process. It should clearly state the price, terms, and any contingencies for closing the deal. Common contingencies might include successful completion of due diligence, financing approval, or obtaining necessary regulatory approvals. After the purchase agreement is signed, you'll need to transfer membership interests and file the appropriate forms with the state to update the LLC's ownership information. Finally, develop a plan to integrate the LLC into your broader business operations, if applicable. Buying an LLC can be a complex process, but with careful planning, thorough due diligence, and professional guidance, it can be a strategic way to enter or expand your presence in the business world. Remember, each purchase is unique, so always consult with legal and financial professionals to ensure your specific needs are addressed throughout the transaction.